solve. Silence everyone. First we will solve all examples on straight line method, then reducing balance method. And keep it in mind whether straight line method or reducing balance method, the accounting entries, preparation of ledger account, effect in final accounts is going to remain same. Only that example which I gave you in the beginning yesterday, how to calculate depreciation in straight line method on cost price every year, and in reducing balance method on book value every year. That amounts will differ, but accounting entries, ledger account, final accounts will remain same. Understood that everyone? So, first of all, we write one formula for straight line method which I already made you write in final accounts also. Annual depreciation is equal to C minus S upon N, where C is the cost price, which will be equal to purchase price plus expenses. Okay, cost price will be equal to purchase price plus expenses. S is the scrap value at the end of its useful life. Means if you assume that the asset can be used for 5 years, then scrap value after 5 years at the end of its useful life, and N is its useful life, which will be in terms of number of years. All of you are clear with this formula? Now that's the reason, suppose, be reminded, yesterday we discussed the example wherein I told you 100 after 10 years will become 0, the cost price of 100. But suppose the life is 5 years. How much is the life? 5. Scrap value is 10,000 and asset is of 1 lakh. Then 1 lakh minus 10,000, 90,000 divided by 5 years, 18,000. What annual depreciation you will provide? 18,000. So what will happen? First year the value is 1 lakh. After 1 year, 82,000. After 2 years, 64,000. After 3 years, 46,000. After 4 years, 28,000. After 5 years, 10,000. So after 5 years, does it become 0? It becomes how much? What is 10,000? Scrap value. That's why, what did I make you write in straight line method? Last point. That at the end of its useful life, what will be the value of assets? 0 or scrap value. Either it would become 0 if there is no scrap value, or it would be coming down to scrap value if it has a scrap value. Whereas in RBN, it will never be reduced to 0. Yes, it may be reduced to scrap value. Did everyone understand this portion? Okay. So straight line method means every year the amount will remain same. So formula is C minus S upon N. All are clear with this? Now let us take up with page number 66. Question 5. Sub question 1. Be attended. Suresh Limited has purchased machine for rupees 63,600 on 1/4/2012. What is 63,600? No, it's not the cost price, it's the purchase price. Okay. Installation expense of machine was incurred rupees 1,000. So expense is 1,000. What will be its cost price? 63,600 plus 1,000, 64,600. Is everyone clear with this? Is the camera on? Okay. If scrap value is estimated to be rupees 14,600 after its life of 8 years. So S, scrap value S is 14,600 and after its estimated life of 8 years, so its useful life N is 8 years. Determine the annual amount of depreciation and annual rate of depreciation. The rate of depreciation is a normal concept. Depreciation upon cost price into 100. Okay, how can you find the rate of depreciation? Depreciation upon cost price into 100. Like for example, here the depreciation was how much in the example I gave you? 18,000 and cost price 1 lakh. So 18,000 upon 1 lakh into 100, 18% would be the rate of depreciation. Okay, so how do you find the rate of depreciation? D upon C into 100. Further, accounting year of the company ends on 31st March. Generally the accounting year ends on 31st March. Write journal entries for the first and 3 years. You will write the journal entries for the first 3 years. And also prepare machinery account and depreciation account. So journal is also asked, ledger is also asked. When journal is asked, then ledger is not at all a trouble, because ledger accounts we can directly do from the journal. If journal is not asked, then what shortcut you can follow? PP. What is that PP? Purchase and profit on debit side, everything else on credit side. Show the accounting effects in the annual accounts and then of first year. Means that P&L and balance sheet we don't have to make for all the 3 years, that we have to make only for the first year. Company charges depreciation under straight line method and then straight line method of depreciation. So all are clear with every information given to you? First of all, we will count annual depreciation and rate of depreciation. First, let us write down the particulars. The cost price will be equal to 63,600 plus 1,000, 64,600. Is everyone clear with this?
Yes, sir.
Any doubts up till here? Scrap value is 14,600. And estimated life of the asset N is 8 years. Therefore, annual depreciation in bracket D is equal to C minus S upon N. 64,600 minus 14,600, that would be 50,000 divided by 8. Did everyone understand this? Yes. So do it 50,000 divided by 8.
6250.
What would be the amount of annual depreciation? 6250. Raise your hand who did not understand this. All are clear with it? And rate of depreciation R. Is equal to D upon C into 100. What did we get? D depreciation 6250 divided by C cost price 64,600 into 100. 9.67%. Is it 6666 really? 674. Okay. So 9.67% is the rate of depreciation. Did you understand it? Means on the cost price, if you count 9.67%, it would come to 62. Try that. 64,600 into 9.67%. What do you get? Slightly 4 rupees less because of rounding off. It was not exactly 9.67%. Okay. So is everyone of you clear with it? means that 9.67% of cost, 64,600 every year the depreciation comes to 6250. Any confusion in this? Now we have to pass journal entries for how many years? 3 years. So we'll always make workings in this chapter. Workings is like Bible in this chapter. If workings are correct, everything else will be correct. Everything else is easy. Working is the most important thing. Initially the workings will be simple. Once you have 2 machines, the complications will increase. So every question we will be making one workings, and that will help us to do the journal, ledger, effects and final accounts, whatever is asked. Okay. So that workings will be done in this manner. The same manner as I explained to you yesterday. How we count the depreciation in SLM and how we count in update. So workings. What is the date of purchase? 1/4. Raise your hand who is still writing up till rate of depreciation. All are completed? Because it is asked. 1, 2, 3, third line. Determine the amount of annual depreciation and annual rate of depreciation. Okay, if rate of depreciation was not asked, we would not have found it. Yes, now working. Note 1. What is the date of purchase? 1/4/12. Add on. Purchase 63,600. Okay. Plus expenses 1,000. So 64,600 is the cost. Now be careful, year 1/4/2012 will end on 31/3/2013. 1/4/2012. 1 year you will get over on 31st March next year 2013. Okay, April to March. So 31/3/13 we will provide depreciation. Raise your hand who did not understand the year ending 31/3/13. 1/4/12. So it's not January to December. January to December the year remains same. This accounting in April to March. So 1st April 2012 will end in next year's March. That year will get over in next year's 31st March. That is 31st March 2013. Raise your hand is still not clear with that, because this is a very important point where majority of you would make a mistake. 1st April 2012, year is of 12 months. So after April 2012, if you count 12 months, then last 3 months will be of the next year. As in final accounts we used to have. Okay, if January to December calendar year, then 12 months get over in the same year. 1/1/2012 to 31/12/2012. But 1/4/2012 means the year after 1st January, any date. If the year ends, then it will go into the next year. Even if you count from 1st February 2012, then 1 year will end on 31st January 2013. Okay, so other than 1st January, any date comes, then year will always end in the next year. Raise your hand, is still not clear with this? All are clear with this? So 31/3/13 we have to provide depreciation 6250 as we have calculated. 6250. Straight line method, every year the depreciation will remain same. So 64,600 minus 6250, 58350 will be the book value on 1/4/13. After 31st March 13, what will be the next day? 1st April and 2013 only. After March the year will not change. After December the year changes. But after 31st March 2013, what will be the next day? 1/4/13. So closing value of this year will become opening value of next year. Is everyone clear with this? Don't write 1/4/14, the year will change. Then that is not next day, that is next year. Okay, after 31/3/13, the next day will be 1/4/13. Any confusion in this? So 1 year's depreciation is provided. Now, Same way 1/4/13, the year will end on 31/3/14. Raise your hand who is not clear with 31/3/14 now. After 1st April 2012, the year ended on 31st March 2013 next year. So after 1st April 2013, the year will end in next year 31st March 2015. Anyone else who is not clear, the confusion will arise, ask me the doubts. Because initial 1-2 question, if you ask the doubts, then other questions, confusions will not arise. Is everyone clear with this? So minus depreciation. Straight line method means depreciation will remain same. So again 6250. 52100 will be the book value. Other than book value, what can we call it as? Written down value, WDV. Okay, this will be the book value. It will be the book value on which date? 1/4/14. After 31/3/14, next day 1/4/14. Raise your hand who did not understand this 1/4/14. All are clear with this? 2 years depreciation is done. We have to do it for 3 years. So 31/3/15. Now you understand this 31/3/15. Anyone who did not understand this? Minus depreciation, straight line method, so it will remain same 6250. 45850 will be the book value on which date? 1/4/15. After 31/3/15, next day 1/4/15. Is everyone clear with this? So this kind of workings will always mean whenever anything is asked, journal, ledger, final account, whatever is asked. Now very first thing what is asked is journal entries of 3 years. Okay, if you remember yesterday I made you write that depreciation 2 entries will be repeated every year. So first year we will have 3 entries. Purchase and 2 entries of depreciation. Then every year we will have only 2 entries. Depreciation's 2 entries will be repeated every year. So first year 3 entries, second year 2 entries, third year 2 entries. Total 7 journal entries will be there. Is everyone affected with it? Okay, which 2 entries are to be repeated every year? Depreciation. Providing depreciation and transferring it to profit and loss. These 2 are to be repeated every year. So total 7 journal entries are to be asked. Make the format of journal. Journal entries in the books of, make the format everyone. Raise your hand who is still making the format. 30 more seconds, do it fast. Now question is not required. All the entries, ledger account, everything we have to do from the workings only. Okay, the question itself we brought it down in the workings. Now every account needs to be done from this workings. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. See, first of all, on 1/4/2012, we have to pass the entry for purchase of asset. So that on 1/4/12. Now here, which asset is purchased? Machine. So machine comes in, debit what comes in? Machinery account debit. With the cost price 64,600. And I told you big amount we will pay by check. So 63,600 we have given check. Bank is the giver, credit the giver, to bank account 63,600. And that small amount of expense we will pay in cash. So expense of 1,000, cash goes out, credit what goes out, to cash account 1,000. Any doubt in this?
No.
Raise your hand who is not clear with this entry. Being machinery purchased and paid installation expenses in cash. So entry of purchase is done. Understood this? As I said, from the workings we have to do everything. After purchase, now we have to provide depreciation. And remember, depreciation will have two entries. First, on 31/3/13, we will provide depreciation. So depreciation is an expense, debit all expenses and losses. Depreciation account debit 6250, and the value of machine goes down. It's a debit balance. To decrease it, we reverse and credit to machinery account 6250. Okay, as we studied yesterday, the general entry of depreciation account debit to asset account. Here depreciation account debit to machinery account. Is everyone clear with this? Being depreciation provided by SLN. Understood this? Now on the same date 31/3/13,
SLM, straight line.
now on the same date 31/3/13, depreciation will be closed and transferred to profit and loss account. So 31/3/13, profit and loss account debit 6250 to depreciation account 6250. Okay, depreciation we debited to close it, we reverse and credit, and we transfer it to profit and loss. So profit and loss account debit. Any doubt in this? Being depreciation account transferred to profit and loss account. So 1 year is over. Did you understand it? Now what we have to do is, these two entries we have to repeat every year, and we have to do this for total 3 years. First year is done, 2 more years we have to do. So now after this 31/3/13, next entry on 31/3/14, book value doesn't have any entry. There is a balance in machinery's ledger account. Book value has no entry. It represents the balance in machinery account. One more time, book value has no entry. It represents the balance in machinery account. So after that, directly on 31/3/14, now same two entries for depreciation 6250. And on 31/3/13, 31/3/14, depreciation account debit 6250 to machinery account 6250, being depreciation provided by SLM. And again same date, profit and loss account debit 6250 to depreciation account 6250. Understood this, everyone? Being depreciation account transferred to profit and loss account. So this second year's entries are done. Now in book value, no entry. Now on 31/3/15, again for this 6250, we have to repeat the same two entries. Okay. So 31/3/15, depreciation account debit 6250 to machinery account 6250 being depreciation provided by SLM, and again 31313 profit and 31315 profit and loss account debit to depreciation account 6250. Did everyone understand this? Anyone have any doubt in it? So everyone is clear how to make the journal entries. Any confusion in this? Presently, first question, so we don't have sale of machine, otherwise sale of assets, entry, etc. also we have seen. If sale of asset comes, then that point will be incorporated. Okay? Now you are asked to make two ledger accounts first. Machinery account. Read the question. Write journal entries for the first 3 years that we have done. And also prepare machine account and depreciation. Also now we have to prepare machinery account. So ledger of Suresh Limited. First we make machinery account in that. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Be attentive now. Since we have made the journal, we'll make the ledger account with the help of journal. It is more easier. If we don't have the journal directly the workings, then we will follow the shortcut. But right now we can use the journal for that. So first entry 1412 machinery account debit means in machinery account we will write on debit side 1412 opposite both the accounts to bank account 63,600 same date 1412 to cash account 1,000. Did you understand this? Okay, machinery account debit. So in machinery account on debit side to bank account 63,600 to cash account 1,000. All of you are clear with that? Now second entry 31,313. Anyone still writing this? Raise your hand. Second entry 31,313. Depreciation account debit to machinery account. To machinery account, so in machinery account we'll write on credit side. The date is 31/3/13. Name of opposite account by depreciation account. Amount is 6250. Okay, to machinery account, so on credit side of machinery, opposite by depreciation account 6250. Is everyone clear with it?
Yes, sir.
Third entry will have no effect on machinery account. In the third journal entry, do you find machinery account?
No.
So it will have no effect. Now 1 year is over, so we'll have to do the balancing. After every year is over, we have to do the balancing. So debit side total is more 64,600. Write it on both the sides. 64,600 minus 6250, 58,350. 31,313 by balance carried down. Okay, as we used to do the balancing in ledger accounts. And next day opposite side. What will be the next day after 31,314? 1,414. Opposite side 1,413. 1,413 opposite side to balance brought down 58,350. Did you all understand this?
Yes, sir.
This should always match with the book value in workings. On 1,413 in the workings, what is the book value? 58350. And as I told you here, book value we don't pass any journal entry. It represents balance in the ledger account. You can say it represents the balance in the ledger account. So this balance should always match with book value of workings. Okay. So this first year is done. Anyone still doing the balancing? Raise your hand.
Next one.
Completed. Now look at the next year's entry. 31,314. Again depreciation account debit to machinery account. Again to machinery account means machinery account on credit side. Date is 31/3/14. Opposite account by depreciation account. Amount is 6250. Did you understand this, everyone? Any confusions with this? Now, will this entry have any effect? Profit and loss to depreciation? No, it will have no effect. Again, second year is over, so we have to do the balancing. So 58350 minus 6250, 52100, 31,314 by balance carried down, opposite side 1414, to balance brought down 52100. Did everyone understand this? Okay, it should match with book value. See book value on 1414, what is it? 52100. Is everyone clear with it? Now 31,315. Again depreciation account debit to machinery account. To machinery account, so in machinery account we'll write on credit side. 31,315 opposite account by depreciation account 6250. Are you able to understand this? And will this last entry have any effect? P&L to depreciation? No. That year is also over, so again we will do the balancing. 52100 minus 6250, 45850, 31,315 by balance carried down, opposite side 1,415, to balance brought down 45850. Over. Did you understand this? And this should match with book value. See on 1,415, what is the book value? 45850. Did everyone understand this? How to make 3 years machinery account? Any doubt in that? Other than machinery, which one more ledger account is asked? Depreciation. So now same way make the format of 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Now be attentive. First entry will have no effect on depreciation account. Only second and third entry will have effect. First will have no effect, there is no depreciation. Now second, depreciation account debit. So in depreciation account we'll write on debit side. Date is 31/3/13. Opposite account to machinery account 6250. Did you understand this, everyone? Okay. And next entry will also have effect. 31/3/13. Profit and loss to depreciation. To depreciation means in depreciation we'll write on credit side. 31,313. Opposite account by profit and loss account 6250. Squared up account, it will not have any balance. Both the sides total is same because it is closed and transferred to P&L account. Did you understand this first year's entry? Same things you will repeat for the next 2 years. Again on 31,314, depreciation account debit. So depreciation account on debit side 31,314. Opposite account to machinery account 6250. And from the next entry 31,314, profit and loss account debit to depreciation. To depreciation, so depreciation on credit side 31,314 by profit and loss account 6250. Squared up account and 31,315 depreciation account debit. So again in depreciation account on debit side, opposite account to machinery account 6250. And from the last entry 31,315, profit and loss to depreciation. To depreciation, so on credit side 31,315 by profit and loss account 6250. And again no balance. Total of both the sides will be same. Silence everyone. And that's why I told you yesterday that here no shortcut is there because the account itself is very short. You just have to remember to machinery by P&L. Every year you have to do that. To machinery by P&L. Is everyone clear with it? What else is asked?
Nothing.
What nothing? Show accounting effects in annual accounts of first year. Okay, we have to show the effects in annual accounts means final accounts, profit and loss account and balance sheet. Everything what we learned yesterday is asked in a single question. So, give the heading effects in final accounts. But we are asked for the first year. First year ends on which date?
31.
First year ends on 31/3/30. So profit and loss account for the year ended 31/3/30. Don't make 2 pages, we are not taking full final accounts. Only effect of depreciation we are showing, so 2 lines only. 2 lines profit and loss account, okay? Okay, so effects in annual accounts or final accounts means profit and loss account and balance sheet. Here it is asked for only first year. Otherwise you would have done this thing 3 times. These 2 things. If first year was not mentioned, then we have to do it for first year, again you have to do it for second year, again you have to do it for third year. But here first year is specified. 30 more seconds, do it fast. Small formats, 2 lines formats are to be made, okay? 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Now, in profit and loss account, we have studied in final accounts and we recollected it yesterday also. Silence. In profit and loss account, debit side, we show 2 depreciation. First year, the depreciation is 6250, and because it's straight line method, every year it is same. But first year it is 6250. So this effect will come in profit and loss account. Understood that? And asset side, machinery. Now again, it's for the first year. So in the first year the machinery cost is 64,600. In the first year the cost of machinery is 64,600 minus depreciation 6250 58350. Okay, this is how we would show the things in balance sheet. Machinery 64,600 minus depreciation 6250, outer column 58350. If it was asked for second year also, then again in P&L account we would have debited 6250. But how would you show the balance sheet machinery in second year? 58350 would come in inner column. First year's closing value will become next year's opening value. So in the second year 58350 would come in inner column minus 6250. In the second year we would show this. 58350 minus 6250, 52, 100. And if it is asked for third year, P&L same thing would come, but in asset side 52, 100 minus depreciation 6250, 45850. Did you understand this, everyone? Okay. So this question is which